Why did the senior citizen throw a party in 2016? Because he realized his standard deduction went up and he saved enough to afford a celebration. But the next day he had to call an accountant. He couldn't remember if party hats were tax deductible. And now, let us explore 11 practical tips on standard deduction for seniors 2016. Tip 1. Understand the standard deduction amount. For seniors, the standard deduction amount is higher than it is for younger tax filers. In 2016, the standard deduction for a single filer who is age 65 or older is $7,850. This is $1,550 higher than the standard deduction for someone under 65. Tip 2. Consider whether to itemize. Even though the standard deduction is higher for seniors, it may still be beneficial to itemize deductions. This will depend on the individual's personal situation and the types of expenses they have. Tip 3. Don't forget about medical expenses. Medical expenses can be a significant cost for many seniors. If these expenses exceed 10% of adjusted gross income, they can be deducted. Tip 4. Remember the deduction for real estate taxes. If a senior owns their home, they can deduct real estate taxes. This could make it more beneficial to itemize rather than taking the standard deduction. Tip 5. Consider charitable contributions. Charitable contributions can be deducted if itemizing. Many seniors make significant donations to charitable organizations, so this can be a valuable deduction. Tip 6. Don't overlook the deduction for state and local taxes. If a senior pays state or local income taxes, these can be deducted if they choose to itemize. Tip 7. Know the rules for capital gains and losses. Seniors who have sold investments may have capital gains or losses. These can impact whether it's better to take the standard deduction or itemize. Tip 8. Be aware of the deduction for mortgage interest. If a senior still has a mortgage on their home, they can deduct the interest they pay. This is often a substantial amount. Tip 9. Remember the deduction for personal property taxes. If a senior pays taxes on personal property such as a vehicle, these can be deducted if itemizing. Tip 10. Understand the rules for pensions and annuities. Some types of pensions and annuities are taxable, while others are not. This can influence whether to take the standard deduction or itemize. Tip 11. Consult a tax advisor. The tax rules are complicated and each individual's situation is unique. Seniors may benefit from getting professional advice to ensure they take the best approach to their taxes.